Okay. Waheguru Ji Ka Khalsa, Waheguru Ji Ki Fateh. My name is Jaspreet Singh. This is my first time doing a Facebook Live like this, so I hope that you can hear me and see me okay. I'm going to give a minute just for people to come online before we start talking about money management and understanding finances during this 2020 crisis that we're seeing right now. So give me just 1 minute and we're going to let people hop on, and then we're going to get started with this Facebook Live. And if you do have questions or if you have any sort of troubles or concerns, just leave a comment and I will do my best to answer all the questions that we get. All right, so let's get started. First, what's going on in the economy and financial space right now? So as we all know, there is a crazy virus affecting people all over the world. And the most important thing right now is your health. If you're not healthy, nothing else matters. So the first thing, your first priority should be taking care of yourself and taking care of the health of your family. After that, you need to know how to take care of your finances and make sure that your finances are healthy, especially during this crisis, because we don't know to what extent this crisis or financial recession is going to last and how bad it will really affect the economy. In March, the stock market, we saw it fell faster than ever in history. We saw like a 30% drop in the stock market in just a couple weeks, which is unheard of. And we are seeing unemployment rates go up with staggering numbers. Like this morning, this Thursday morning, actually, it was reported that last week, 6.8 million Americans filed for unemployment. The week before, it was 6.6 million, and the week before, it was about 3.5 million. So every week, millions and millions and millions of people are becoming unemployed, are losing an income stream, and are filing for unemployment. So what can you do to protect your money during this crisis? That way, one, you can make sure that your financial health and your family's financial health is safe. And second, so you can come out of this crisis a financial winner, because with every crisis comes opportunity. And this is a time for you to really be thinking different and understanding how money works. So first things first, if you are in some sort of financial trouble, if you lost a job, or if you find yourself tight on cash, or you have financial difficulties during this time, the first thing you want to do is look into your state's unemployment benefits. Pretty much every state in the United States has some sort of unemployment benefit program available out there right now. I know my state, they are paying up to $600 a week to people who have been unemployed or who are now unemployed. In addition to that, there are also federal benefits that you can get from the United States government. So there's two governments. You have your state government, which is for the state that you live in, and then you have the federal government, which is for the United States. The United States also has a number of programs available right now to help you take care of your finances during this crazy time. And I know that they also have some programs where they're paying people who are unemployed up to $600 a week, and that's in addition to your state benefits. And thirdly, in addition to that, the government approved a $2 trillion stimulus package. Some of that money is going to be coming to you through checks. If you made under $75,000 last year, you should expect a $1,200 stimulus check being mailed to you or being deposited into your bank account. If you made over $75,000 and under $99,000, then you will get a little bit less. And if you're married, just double the numbers. If you make under $150,000, you can expect $2,400. And if you make under $198,000, then you will get, if you make over $198,000, you will get zero. But if you make over 150 and under 198,000 as a couple, then you will get a reduced amount. So that's kind of what's going on in the terms of benefits by the state and the government. Now, before I get into what you should be doing to protect your money, let me give you a quick intro about me. So for those of you who don't know, my name is Jaspreet Singh. I am an attorney, and I run a financial news and education company called Minority Mindset. Many people know Minority Mindset as a YouTube channel. Right now, we have, I believe, just over 570,000 YouTube subscribers. And our purpose of Minority Mindset is to cover the financial news and education space. And we call it the Minority Mindset because the whole concept of Minority Mindset is to think different than the majority of people. It has nothing to do with the way you look, your ethnicity, skin color. It's all about your mindset of thinking different than the majority of people when it comes to your money. So I grew up in a traditional Punjabi house, and like most Punjabi parents, my parents wanted me to be a doctor. And I followed that route for most of my life, or at least most of my schooling life. And then I realized that I was going to this pre-med route for all the wrong reasons. I was becoming a doctor because I thought that was how you become successful, rather than becoming a doctor because I thought that's what I wanted to do. And so once I had this realization, I kind of changed, went into law, and I found this love with finance, and I pursued that. And so then I created Minority Mindset because I never grew up learning about money, investing. I saw my parents work crazy hours all the time because, that's what people do to get by. But I always thought there was a better way. So that's when I started learning about money, learning about investing, getting involved with these things. And then I created Minority Mindset as my way of spreading financial education and spreading the financial news because, well, most media outlets out there, in my opinion, are in the business of selling hype or emotion. They tell you that the world is going to end when things are bad, and they tell you that nothing bad can ever happen when things are good. So our financial news is there to kind of cut through the noise and give you real financial news. We call it financial news you can actually use because we want to give you, one, the real financial news, and then we show you how this news affects your wallet. So every day we release a financial newsletter where we show you what's happening in the world financially, and then we show you how this news affects your wallet. And then on the financial education end, we have our YouTube channel where right now we have daily videos where we cover what's happening in the world right now financially so you can best take care of your money. And we have a blog where we put out lots of content on how you can best manage your money, invest your money, grow your money, and take care of your wealth because, well, without any financial education, you won't know what to do with your money. So that's what we're doing with our content. Now, I want to go into things that you can be doing right now to take care of your family outside of the state programs and federal programs that are out there for the government. One, the very first thing you need to do, this one's not really financial, but it sort of is you need to get off of the news. If you know that there's a virus out there and you are taking your precautions, sitting there and watching the death count all day long on the news is going to give you anxiety, it's going to give you a mental breakdown. Don't be a slob just sitting there watching the news all day. It's not healthy for you, and just keeping up with what's happening isn't going to help. You can't help the world by sitting there watching the news. So one, make sure you're mentally okay. If the news is stressing you out, turn it off, do something else, get dressed, go for a jog, and just do anything else besides watching the news. I mean, I know this because, like I was saying, we're in the news business, and it's very painful to see the amount of people that are just getting obsessed by what's happening in the news, and they stop taking care of themselves. Take care of yourself first. Once you can take care of yourself, then you can take care of your family. Then, second is, now we need to talk about savings. You need to build savings. We don't know how bad or deep this recession will be. Our economy really started to get hurt in March of 2020, and the average recession lasts somewhere between 12 to 18 months. So we don't know how long this will be. There's a chance that this could be very short, and there's a chance that this could be very long. But you don't want to risk not having any sort of cushion to protect you from a bad recession or a longer recession. So the first thing you need to do is you need to start saving money as fast as possible. So one, stop spending money on things that you don't need right away. So if you have monthly memberships on things that aren't essential, get rid of them. Second, sell some things that you don't need. If you have things laying around the house that are just sitting there, there are a lot of websites you can go to sell them. That way you can accumulate this cash. That way you don't have to worry about going into debt if an unexpected emergency happens, because, well, the whole world is in an emergency right now. I think it's like something close to 4 out of 10 Americans don't have $400 saved up to protect themselves from an emergency. Right now, we're seeing unemployment spike, and we have emergencies all around the country. So protect yourself, take care of yourselves, build that savings cushion as fast as you can by selling whatever you can. Stop spending money on whatever you can. That way, you have the savings cushion saved up, protecting you from anything. And as a quick tip, if you save your money in most traditional banks, you are going to get a very low interest rate on your savings. One thing you can look into is an online bank, because online banks have less overhead, less fees they have to pay than traditional banks. They're still banks, they're still FDIC insured, they still protect your money, but the difference is they have less fees, so they can pay you more interest on your money. So take a look at some online banks if you're looking to get some more interest on your savings. And we have some articles on this on our Minority Mindset website if you are interested in learning more. Second, if you are worried about your family's finances, in case something were to happen to you, look into some sort of risk protection insurance. So insurance is something that we buy to protect us from worst case scenario situations. So if you buy a car, you buy insurance on the car just in case you get into an accident. That way insurance will be there to protect you, to cover the cost of the car, to cover the cost of injuries or anything like that. We hope that you don't have to use your insurance, but it's there as protection to protect you and to protect your family and to protect your finances from the worst case scenario type of situation. Well, similar to that, you can purchase life insurance if you are worried about your family's health. The way life insurance works is you pay a premium, a certain amount of money monthly to this insurance company, and then if you die during the term of your life insurance, then the life insurance company will give your family a paycheck, a big check. And so this check can be $500,000, $1 million. It just depends on what kind of plan you decide. Now, what you need to understand about life insurance is not all life insurance is made the same. So you need to do your research on life insurance because, some life insurance agents are very great. Others are not. Others are going to be more worried about their wallet than they are about yours. So you need to know the basics of life insurance before you start going around and just buying life insurance, because not all life insurance is made the same. I'll give you a quick example. If you are a healthy 30-year-old male and you want to buy a $1 million life insurance policy, you can buy one kind of life insurance, which is called whole life insurance, which would cost you about $800 to $850 a month. Or you can buy term life insurance, which would cost you something around $30 a month for the same $1 million policy. Now, there's a lot of differences between the two, but you need to make sure you understand the right policy for you because everyone's finances are different. Some of you will have investments. Some of you won't have investments. Some of you might not be interested in investing. Others of you will be much more interested in investing. So based on your finances, you need to pick the right life insurance plan for you, especially if you're worried about your family's financial health. And as a little caveat to that, one thing you should also be aware of is if you have any sort of debt, like let's say you have student loans and you have a co-signer on your student loans, like your parents or somebody else, if you happen to die, that loan that you have, that debt that you have doesn't go away. The person who is the co-signer will now be responsible for all the loans. And so life insurance can also be there to help pay off these loans or debts that you have. So if you have loans, if you have debt, if you don't have a nest egg or investments that can take care of your family in case you did happen to pass away, that's where life insurance can come in handy, because that can come in and make sure that at least your family would be financially okay from a worst case scenario type of situation. Again, I hope that you never have to use life insurance. That's the goal with insurance. The hope is that you never have to use it. But from a worst case scenario type of situation, it can be there to protect you. So that's why, I call insurance the risk protection, risk management strategy, because it's there to protect you from worst case scenario type of situations. The third thing you should be doing now is investing your money. So if you have extra cash reserves, if you have extra cash, this is the time to use it. They say more millionaires are made during recessions than any other time. And the reason that is because when recessions happen, when crises happen, opportunities open up. And so this is where you really need to be thinking different than the majority of people, right? The minority mindset, and look for opportunities. The first thing and the most risk-free way is if you have any sort of student loans between now and September 30th, the government has stated that there will be no interest charged on your student loans and no payments are due on your student loans between now and the end of September. So what that means for you is you can make payments on your student loans and 100% of your payments will go directly to your student loan balance. So this is a great opportunity for you to start paying down your student loans and take a huge bite off of your student loans without paying any money in interest. So the way loans work is a piece of every payment you make on your loans is going to go towards your loan balance, which is called your principal, and the other piece is going to go towards interest, which is the money that your bank gets or whoever your lender gets. So for the next few months, you can pay money towards your student loan balance and have your lender get nothing if you got a federal student loan. So every dollar you can pay can go straight to your student loan balance without paying a penny in interest. This is an amazing opportunity for anybody who has student loans to take a huge bite out of them without paying any additional fees or anything in interest. And so this is an opportunity for you to get out of debt very quickly if you have student loans and you have the extra cash. So before you do that, you want to make sure you have savings to protect your family from going into debt. But after that, start paying down your student loans very quickly because this is an opportunity to do that. Second is investing your money in more traditional investments. So I don't want to go too deep into this because investing has risks. You're never guaranteed to make money when you invest. You might even lose money. So make sure you always do your own due diligence. I am an attorney, but I'm not your attorney and I'm not your financial advisor. So always do your own due diligence. Now, what we've seen time and time again through history is when economic crashes happen or stock market crashes happen or any sort of recessionary type events happen, over the long run, the economy, the stock market, and strong companies tend to go up. And right now, the stock market is on sale. So this is an opportunity for anybody, if you have an extra $100, for you to invest it into things like the stock market, into strong companies or funds. I'll talk about that in just a minute, because they are on sale right now. The stock market has been hit very hard. And what we've seen time and time again is that over the long run, the stock market and strong companies go up. Could it be that this time is different? Yeah, it is possible. That's why investing has risks. But there are two types of investments you can make in the stock market. In general, two types. You can invest in individual companies. So this is companies like Amazon, McDonald's, Nike, whatever your favorite company is, wherever you like to spend, you have the option to invest in them. And if you spend $100 buying one share of a company, like if you buy one share of McDonald's, you become one of the owners of McDonald's. You don't have to go and flip burgers or do any of the work, but you get a small little piece of ownership. And now when other people spend their money at McDonald's and McDonald's makes money, you get rewarded with money. So the two ways you can get paid is through appreciation, which is when the price of your investment or your stock goes up. And the second way you can make money is through what are called dividends. Dividends are cash payments that company owners pay you just for owning the right company. So if a company has a lot of cash at the end of the year, they can use some of that money to build a savings account. They can use some of that money to invest in their business. And the third thing they can do is they can reward their owners for making a good investment. And so that owner would be you as an investor in McDonald's or whatever company. Not every company pays a dividend. Some companies do. And so if you own a company and they pay a dividend, that means every usually 3 months, they will just deposit cash into your bank account, or they will send you a check depending on what you do. And so now you're getting cash just for investing in a company, and you don't have to sell your stock or investment to make this money. The second way you can invest in companies or in the stock market is by investing in what are called ETFs. An ETF is an exchange traded fund, and that's just a fancy way of saying a group of stocks. So if you are not a investor or professional investor it is very daunting to try to figure out what's the best company to invest in, because if you make a bad investment, you risk your whole investment portfolio going to zero. But that's where ETFs come in handy, because you can invest in what are called index funds. And an index fund is essentially a group of stocks. So now you can invest in an index fund. I'm just going to give a couple examples. Now, again, don't just blindly invest in these things. You should do your own research. But two examples are VOO and SPY, SPY. These two index funds mimic or are comprised of the top 500 companies in the United States. So if the stock market goes up, these index funds go up. If the stock market comes down, these index funds will tend to come down too. But now you don't have to worry about trying to find the best company or the perfect company to invest in. You are just investing in a fund which essentially mimics the stock market or the top companies in the United States. So it's an easy way for you to get started investing without trying to find the perfect investment. So those are a few different things you can do with your money. Right? I'm going to go from this again. One is stop watching the news. If it's giving you anxiety, turn it off. You know what's going on. Take care of your health. Take care of your family's health. Two, build your savings cushion. We don't know how bad or how deep this recession is going to go, so you need to build a savings cushion as fast as possible. At a very, very minimum, you need $2,000. Your goal should be to save 6 months worth of expenses, although you can't do that overnight, but that should be your goal long-term to build a savings fund that large. Third, you want to look into risk management. If you are worried about your family's finances, look into life insurance. Remember, not all life insurance is made the same. And if you are looking for more resources on life insurance, we have videos on our YouTube channel, Minority Mindset on life insurance. And we also have blog posts on Minority Mindset, theminoritymindset.com, that cover the different kinds of life insurance and things you need to know before you buy life insurance. Fourth, now, once you can say that you've checked off these three things, now it's time for how do you come out of this crisis a financial winner? How do you build your wealth? Well, one thing you can do is pay down your student loans, because the government has a program right now where if you have any federal student loans, you don't have to pay any interest until the end of September. And on the flip side, if you want to grow, then you can look into investing into investments that are on sale right now. So these are four things you should be doing with your money. And if you have been hit financially hard, if you lost your job, or if you're facing some sort of financial stress, look into the programs being offered by your state government and the federal government right now, because every state has programs where they are helping people who lost a job, and the federal government is doing the same thing where they're helping people who lost their jobs. So you can make money kind of both ways to help get through this crisis, and you should be expecting these stimulus checks if you make under $75,000 sometime over the next couple of weeks. So that gives you kind of a brief overview of what's happening and some things you need to know for your money. And now I want to get into questions. So if you have questions about anything that I've talked about, anything related to your money, anything related to kind of your financial health, let me know in the comments, and I'm going to start reading them, and I'm going to start answering whatever questions I can. So first off, thank you everybody who has joined in and stayed through this Facebook Live. Thank you for sharing knowledge. Thank you for joining in, everybody. Been working on your 6-month savings since Gurumastak Singh, great job working on the emergency savings. We never know when emergencies happen. That's why you should always have them ready for emergencies. Thank you for joining, everybody. From all over the world. Wow, we have people from Canada, India, everywhere. So yeah, if you have any sort of financial questions or any questions about your financial health or anything related to your finances during this crisis or in general, put them in the comments and I'm going to try to answer whatever I can. Okay, as those comments start coming in, let's go a little bit deeper into the different types of ways you can be investing your money. So there are multiple different types of investment accounts out there. If you work for a large employer, chances are you have the option to invest in a 401k. If you don't, or even if you do, then you have the option to invest in an IRA. And the third option is kind of your general regular investment portfolio. So your 401k and IRA are two types of what are called tax-deferred retirement accounts. These accounts are created by the government to allow you to essentially fund your retirement, and they allow you to grow your money tax-free. Kind of a little bit of history behind these two things is investing is kind of what the government is wanting to encourage for people to retire, because pensions are becoming obsolete. If you have a pension plan, you should really look into the health of your pension, because we're seeing pensions around the country go bankrupt or bust. Social Security is taking in less money than they're paying out. So Social Security is drying up, and unless something is done about Social Security, if you're under the age of 45, there's a good chance that you're going to get a much, much, much smaller Social Security check when it comes time for you to retire, if anything. So the traditional retirement programs that have always been there, that you go to work, you get a job, and then you retire with a pension and Social Security, is becoming history because of what's happening. And so now the government has created programs to incentivize people and encourage people to take charge of their finances and invest their money themselves. That way people can fund their own retirements. Now, this is great news if you know how to invest your money. This is horrible news if you don't understand this. And so you want to be the person on the good news side. That way you can make the best use of your money. So with the IRA and 401k, you need to understand that there are different types of retirement accounts. On a general basis, I'm not going to go super deep into this, but on a general level, you have a Roth investment account, and then you have a traditional investment account. With a Roth investment account, you pay money on your investment today, and then your investment goes tax-free, and then you get to pull your money out, generally tax-free. With a traditional 401k or a traditional IRA, you don't have to pay any taxes on your money today, and then your money gets to grow tax-free, and then you generally get to pull your money out. But when you pull your money out, that's when you have to pay taxes. So the difference between a Roth and a traditional 401k or IRA is when you pay taxes. With the Roth, you pay taxes today. With the traditional, you pay taxes when you pull your money out. Now, what you should be aware of is right now in 2020, we are in a time where tax rates are at historical lows. We have generally low tax rates, and we don't know who our next president will be. We don't know what tax rates are going to look like in 1 year or 5 years or 30 years, whenever it's time for you to retire. And so there's a chance that tax rates can go up a lot in the future, especially because right now the government is working with the Federal Reserve and the Treasury Department to print a lot of money, to fund these stimulus programs, to fund these unemployment programs, to fund kind of all these benefits that are being paid right now. And this has a cost. And the government has their money, gets their money to pay all these expenses through tax dollars. And so because right now there are all these expenses with stimulus checks and bailouts and this and that happening, there's a very good chance that our taxes will have to go up in the future to cover these expenses. So if you have these type of retirement accounts, an IRA and a 401k, it might not be a bad idea for you to consider switching over to a Roth right now to take advantage of today's low tax rates and then grow your money tax-free. That way, when your money is ready to be pulled out, you can pull this money out tax-free, as opposed to paying taxes when you pull your money out, because we have no idea what tax rates are going to look like in the future. And if you are worried about what that tax bill will be, then it's better to pay those taxes today. So if you have an accountant or a financial advisor in your area, talk to them about that, because it might be a little bit more proactive and financially sound for you to pay those taxes today. Third way you can invest your money is through your traditional investments. So that would be things like the stock market, real estate, gold. And these are things you can go out and do on your own account. And the advantage of doing it on your own account is now you have full control over your money. You don't have to worry about getting penalized or fined if you pull your money out early and kind of abiding by other people's rules. You have full control over your money, and so you can invest it however you want, and you can access your money whenever you want. So those are a few different ways you can invest your money, and generally what I've been talking about today is investing your money yourself, but it can apply to any of those different methods that I just spoke about. Going back to the comments. So again, if you have questions about your finances, how to manage your money during this crisis, let me know, and I'm going to start looking into these questions. One comment says, I have some investments like a Roth IRA and kids' college funds, but want to take advantage of the time to invest some funds. Yes, absolutely. And take a look into Roth IRAs, like I was just saying, so you can take advantage of kind of the tax benefits. Harpreet says, when will the markets bottom out? So nobody can perfectly time the market. That is virtually impossible. Not even the best investors in the world can do that. People can try to, but nobody can perfectly predict that. So what happens when people try to time the market is people actually miss out on huge opportunities to make money, because when the market is coming down, they say, oh, I'm going to invest when the market comes down to here, when it comes even lower. And then every time the market comes lower, they keep saying the same thing. Oh, the market's going to come down lower and I'm going to invest then. So then they miss out the opportunity to buy because they never actually pull the trigger. The same thing comes with the upside, because when things are good and things are going up, they say, oh, the market's going to keep going up. I'm going to sell at the top. I'm going to sell at the peak. We're not there yet. I'm just going to keep waiting. And every time the market gets to wherever you think the peak is, you think, oh, it's not slowing down yet. It's going to keep going higher. And then they miss an opportunity to sell at the peak, because then the market starts coming down. And so people who try to time the market miss out on huge opportunities. So what I do, again, do your own research. Don't just blindly listen to what I say or what anyone says. I do a type of what's called drip buying or gradual buying. And what that means is when investments come down, I buy in phases or gradually. That way, as the market comes down, or as investments or funds that I want to invest in come down another 5 to 10%, I buy more. And as things come down further, then I buy more aggressively. This way, I'm not worried about trying to time the market perfectly or trying to, find the perfect opportunity to buy. I'm just buying in phases, in calculated times, as things come down, and then it's the same when they go up. That way you don't have to worry about trying to time the market. Now, if your question is, when will the economy start to get better? Well, there's a few factors you have to look at. One is what's going on in the economy right now. Right now, our economy is shut down more than ever. We have states extending their lockdowns. We have unemployment rates skyrocketing with numbers that we've never seen before. 2 weeks ago, we broke a record when we found out that 3 million people filed for unemployment in 1 week. Last week, we shattered that record when we found out that 6 million people filed for unemployment in 1 week. And then today, Thursday morning, we broke that record again when we found out that 6.8 million people filed for unemployment last week. So the economy in general is in a worse state now than it has ever been. And it won't start to get better until lockdowns end and until people finally have the ability to go out and start working and start spending money again. But the concern is we don't know how likely it is for people to go back to their normal lives right away. We've never seen a pandemic like this in history where countries and the world has been shut down. So we don't know how long it's going to take people to start living their lives again. Maybe it'll happen the same day lockdowns end. People will start going to movie theaters, start eating out, start living their lives and working like nothing ever happened. Maybe it'll take people 6 to 12 months. We have no idea, no kind of indicator telling us how it will be. And that's going to determine how long it really takes for our economy to recover. And we don't have much guidance. I mean, we really have to kind of just play this by ear and see how things go in April and then May and then June. What we do know is in April and May, companies are going to start coming out and they're going to release their statements on how much money they made or lost during the first 3 months of 2020. We know that companies were hurt very badly in the first quarter or the first 3 months of 2020. But what we don't know is how bad or how not bad they were hurt. And that's what we're going to start learning over the next few weeks. So that's going to give us some more data information on how our economy is doing, and that's going to help guide us on what to do next and what's next, because we're in a phase where we have no idea what's coming and what to expect. So I hope that answers your questions about when the markets will bottom out. Somebody asked, would you recommend buying real estate right now? So real estate typically has a lag time behind the stock market. Like we saw in 2008, when the 2008 recession happened, real estate, the stock market tanked in 2008, and then the stock market hit bottoms in 2009. I think it was March of 2009, if I'm not mistaken, where the stock market hit its bottom. Well, real estate didn't hit its bottom until 2011 or 2012. Like 2010 to 12 was the real bottom for real estate, those 3 years. So real estate has a kind of a lagging time behind the stock market, because you can buy and sell a stock in less than a minute. And so the stock market prices can fluctuate very quickly. But in real estate, it can take you months, if not a year, to sell a property. And so if the economy continues to stay slow, if unemployment continues to rise, then you can expect over the next couple of years real estate prices to start to get hurt, to really start to get hurt. Because what will happen then is people will not want to buy a home because they're worried about the economy, they're worried about the recession or a recession, and they might not have the funds available to buy a home. They might not be able to make their mortgage payments. And so gradually you might see foreclosures go up. You might see the demand for people wanting to buy a home go down. And this would cause real estate prices to come down. But again, it takes time for that to happen. And right now we're seeing it in the stock market. But real estate, we haven't seen it yet because real estate has that lag time. Heartbreed says the Dow Jones rising on bad news. Where do you see the bottom? So the Dow rising on bad news, for any logical person, this would make no sense. We're seeing higher unemployment than ever. We are seeing countries more locked down than ever. This morning, we saw 6.8 million people got unemployed last week, and the stock market went up. It makes no sense. But the stock market also has a lot of emotion tied up into it too. The stock market isn't exactly rational. There's a few reasons why it could be going up right now. I actually released a video today on our Minority Mindset YouTube channel explaining this. One potential reason is the stock market might have been oversold in the first place. Two is investors who have cash might have realized that this is a good opportunity to buy and they started buying. Three, people might see some light at the end of the tunnel, and so they might be buying. But again, nothing is resolved, nothing is fixed. And so this is kind of more an emotional buy. And we don't know. I mean, there's a chance that we could have bottomed out. There's a chance that the bottom is still coming. We have no idea, so it's very hard to time the stock market. Arjun Kaur Khalsa says, super helpful. Just finished my own teaching. So just jumping on that, missing the first part. That's awesome. By the way, if you are interested in kind of spreading financial education, if you have students or kids or anybody and you'd like to spread financial education to them, me and my team, we created a free curriculum, K through 12. It's a full curriculum for financial education where we teach you how to teach money. And then we have quizzes, activities, group assignments, homework, everything about money for kids K through 12. And you can download this curriculum for free on our website. Just go to theminoritymindset.com/teacher. So that's theminoritymindset.com/teacher, and you can download that curriculum. Much love from San Diego. Thank you so much. Super helpful. Thank you so much. Perfect. I'm glad these were able to answer some questions. One person asked, isn't the U.S. in a bubble right now? A bubble much bigger than the real estate bubble in 2008? If so, aren't we looking at an economic collapse, more like the 1930s? What are the odds of the U.S. dollar failing through the floor? Okay, so that's a very good question and a lot of questions in there. So, is the U.S. in a bubble? It depends on what you mean by kind of the U.S. So in my opinion, we've had a corporate debt bubble growing for years and years because interest rates have been extremely low. And so companies had been borrowing money like crazy, and they've been just racking up this huge amount of corporate debt. and this virus kind of popped that bubble because we saw how unstable companies really were, because a company was forced to shut down for 2 weeks and they weren't able to pay their employees. So that bubble really started to burst. We had a lot of kind of euphoria in the stock market, which started to burst. And so there's always kind of signs of bubbles. But a bubble only becomes a problem when it pops, right? That's when people really start to worry about the bubble. And so it depends on really what industry you're talking about. Um, a lot of things are being propped up right now through the help of the Federal Reserve, the government, and the Treasury Department. There's been this $2 trillion stimulus package, which funds checks for people, which funds bailouts, which funds a bunch of government relief programs for businesses to help businesses stay in business. But in addition to that, you have the Federal Reserve also printing trillions and trillions of dollars, buying up different investments to make different investment markets look safe. The same thing happened in 2008. If you remember, when the real estate market collapsed, banks, what they were doing were they were packaging up different loans. So a bank would make a bad loan, and then they would take a bunch of these bad loans and package it up, and they would call it a CDO, and then they would sell this package of loans to another bank. Well, similar things were happening over the last couple of years, not with real estate as much, but more with corporate bonds, corporate loans. Like I was saying, big companies had taken out huge amounts of loans, and these loans essentially became worthless, and nobody wanted to buy them. And that's when the Federal Reserve came in and they started buying these loans to make the loan market not look so bad. It's the same thing that the Fed did in after the 2008 crash by buying bonds or loans that were crappy to make the loan market look better. And so they did the same thing here. In March, banks literally were running out of money because when this crash really was getting started, businesses ran out of money. And so they started taking out as many loans as they could. And banks ran into what's called a liquidity issue. They were having problems trying to find cash. And so to keep banks alive, the Federal Reserve said that they would give them up to $1 trillion a day at its peak to keep them alive. So, there's a lot of things kind of behind the scenes. Some of it is pretty crazy, corrupt, whatever you want to call it. But there are a lot of things happening in behind the scenes to kind of prop up the economy and to keep the economy afloat. Is it creating a bubble? Will it pop? We hope that it doesn't. We hope that people stay okay. We don't know to the extent of what will happen. You say, will we see a major economic collapse like the 1930s? Anything is possible. That's where, investing has risks. I just read an article yesterday or 2 days ago talking about how entire countries or economies are on the verge of collapsing. If you look at countries in Africa, where similar to India, where you have a lot of people who work all day, make a little bit of cash, and then they use this cash to buy groceries, and then that's the food that the person and the family eats off of. It's sad, but now with this pandemic spreading, people have no way of earning money and no way of eating. And these countries don't have the same currency like the United States dollar. And so the United States dollar doesn't have any sort of tangible asset backing it. It's not backed by gold, silver, or anything else. It's backed by faith and a promise. And so the only reason your $100 is worth $100 is because somebody thinks, the government says, that your $100 has value. Well, when the United States prints a whole bunch of money, the value of each individual dollar goes down because now their supply of cash dollars go up. But, the worry is, will we ever run into an issue where our dollars become worthless because we print too much money? And the United States is very lucky because the whole world kind of values the United States dollar kind of as the world's currency. And so the dollar has a lot of faith and kind of people believing in it, which allows the dollar to be printed and you still are okay. Will it always stay that way? We don't know. That's why people should always own a little bit of gold. These commodities that kind of protect you against worst case scenario type of situations. Now people say cryptocurrency, but that risk is always there. But other countries don't have the same kind of fortune that United people in the United States do, because other currencies aren't necessarily as faith-based or have as much faith as the United States dollar. And so, before the United States economy really collapses, it's more likely you're going to see other smaller countries around the world take a big hit. And so I think that's much more likely, and hopefully it doesn't happen. But that risk is always there when you see crises and recessions and pandemics like this. So I hope that answers your question. Baji, it's not the time to buy stocks. Should we wait a few more weeks? Like I said before, there's no perfect time. I can't tell you when is the best time to buy stocks. You have to do your own research on that. Harijot says, the dollar being a bubble itself, we print money with no backing. Now Russia, China, others are getting off the dollar for gas trade. Yeah, I hope I kind of answered that. There is an oil kind of crisis going on as well. I've talked about that on our channel. I don't want to go too deep into that right now. Do I regularly talk about this on our YouTube channel? I love how you present information, so relatable. Yes, we are actually talking about this stuff, trying to every day. So the Minority Mindset YouTube channel, there's a ton of content on stuff like this, so feel free to check it out. Guru Mastak Singh says, I'm super grateful seeing you out in the public doing what you're doing, educating people, doing things differently to become financially successful and a part of the minority mindset, all with the turban and full identity of being successful despite standing out. Thank you so much. It's very important to me to move the Qawm forward along with everything else. What's your thoughts on investing in Bitcoin? Okay, so this will be my last question. Cryptocurrency. So I'm not going to speak specifically to Bitcoin. I'm going to speak more on cryptocurrency in general. So the whole purpose of cryptocurrency is to create a decentralized international currency. And what that means is it's a currency that is not run by the government, it's run by people, and it can kind of work beyond borders. And so kind of going into what I was talking about before, how there are trillions and trillions of dollars being printed, this incentivizes investors to purchase more gold. Gold is kind of your traditional, the old version of a decentralized currency, because an ounce of gold in America is going to have the same weight, the same measurements, the same value as an ounce of gold in Australia or Japan or India. Like an ounce of gold is an ounce of gold. And so it's very easy to kind of go between borders with an ounce of gold because it's easy to measure. But trying to ever bring a government or our government to the gold standard again is virtually impossible. And so that's where kind of cryptocurrency comes in as an easy way for people to kind of create their own sort of gold standard from the bottom up. So instead of having the government mandate it down, it's the people. If people start using cryptocurrency, it kind of goes from the bottom up. Now, my thoughts on cryptocurrency, again, these are just my thoughts. Do your own research on it too. The point of any sort of currency is not supposed to be an investment. A currency is supposed to be, a currency, a means of exchange. Cryptocurrency, I think many people buy into crypto for the wrong reasons. They're buying it for the hopes of getting rich, ideally very quickly. But it can serve as a good hedge. Kind of like, it's kind of like a digital gold sort of, because it is supposed to be international. It's supposed to be you can buy it and trade with it, buy Bitcoin in USA and you can exchange it in Italy or France or India or whatever, right? One Bitcoin is one Bitcoin. Now, will it take off? Will that happen? I don't know. But between now and where it was 5 years ago, cryptocurrency has caught a lot of people's attention. It has gotten a lot of people interested. It has gotten a lot of backing. So chances are over the next 5, 10, 15 years, cryptocurrency will become more in demand. Will it ever replace the dollar? I don't know. Will it ever, really have the full value of a currency? Maybe. But it doesn't hurt to, if you're a believer in it, then that's definitely something you should be considering buying. And so, little disclaimer, I do own some cryptocurrency because, kind of like a hedge, right? You own protection investments too to protect you from kind of anything. A good financial investor will always plan for the worst, but hope for the best, right? Always hope for the best. I mean, I think everybody would always hope for the best, but now as a smart financial person, you should always plan for the worst. So be prepared for anything. Who knows? Who thought the world and the country would ever shut down? 2 months ago, that was like a fairy tale. Now it's reality. So you never know what's going to happen, but I'd rather be prepared for whatever. So is cryptocurrency safe? Again, I think I covered a little bit of that. We have some more videos on it on our YouTube channel. Not too many, but definitely do your own research. And someone says, I invested in crypto a little while back, made some money, but sold out. It was too stressful. Yeah, investing can be stressful. All right, so this concludes our talk today with SikhNet. I appreciate everybody joining in for your questions, and I hope that this was able to benefit you, and I hope you're able to kind of handle your finances a little bit better through this crisis, whatever it may be. If you are looking for some more resources, again, you can check out our YouTube channel, Minority Mindset. We are releasing videos daily to help you manage your money. We have our blog, and we have our daily financial newsletter, which if you go to our website, theminoritymindset.com, you will be able to see. So if you have other questions, check out our YouTube channel and our blog. Leave them in comments there, and we will definitely try to help you out there. I appreciate everybody joining in. And yeah, Waheguru Ji Ka Khalsa, Waheguru Ji Ki Fateh.